The Nasdaq-listed Rezolve AI PLC, ticker RZLV, is currently trading at $5.33.05 a share as of 1:23 p.m. GMT-4 on October 15, 2025, reflecting a decline of 2.11% on the day. Now, the immediate gut reaction to seeing a drop like this, especially following a recent bout of intense volatility, is to assume a straightforward sell-off prompted by general market weakness or profit-taking. However, the reality is far more complex and anchored not in fear, but in a quiet but critical ongoing legal dispute. Just a few weeks ago, Rezolve AI was making headlines for dramatically increasing its 2025 revenue guidance to $150 million in annual recurring revenue and initiating a 2026 exit rate forecast of $500 million ARR. This kind of staggering growth projection, coupled with fresh news of closing a $200 million oversubscribed financing round anchored by significant institutional investors, should logically translate into steady upward momentum for the stock. Yet we see this daily erosion, and the core pressure point lies in the litigation with partners like Yorkville and JBAM over a prior financing agreement, specifically a large unclosed Bitcoin-linked transaction. The market narrative on RZLV often simplifies to AI growth stock, high risk, high reward, attracting momentum traders chasing the sector's rapid gains. But the deeper truth is that this stock's daily price action is a battleground between the undeniable commercial acceleration, evidenced by the raised guidance and recent acquisitions of SmartPay and Subsquid to build out their digital asset payment and data backbone, and the substantial, albeit complex, overhang of these legal challenges. This creates a state of perpetual tension for the stock. The technical picture for RZLV shows this conflict playing out in real time. Looking at the intraday chart, the stock opened higher at $5.61, briefly pushed to a high of $5.64, and then spent the rest of the morning bleeding value, consistently hitting lower lows throughout the afternoon session, eventually testing the $5.28 level. This is not the pattern of a healthy consolidation after strong news. It suggests a persistent selling flow that is overcoming initial buying interest. The daily trading volume has been significant, often clocking in at figures like the 11.12 million shares seen today, which is far above what a stock with a relatively small float might normally see. This elevated volume, accompanied by a declining price, indicates institutional traders or large investors are actively shedding positions, likely due to risk assessments stemming from that legal entanglement, even as the company insists the lawsuits are baseless and primarily designed to pressure them. The market is not questioning the technology itself, but the stability of the capital structure underpinning it. If the legal battles, which involve claims for substantial damages related to the $1 billion Bitcoin financing that never fully closed, were to turn decisively against Rezolve, it could force a costly settlement or a messy restructuring, regardless of how strong the commercial growth trajectory is. Investors are wrestling with a price-to-sales ratio that remains extremely elevated given the current revenue base, even with the aggressive future ARR forecasts. Analysts generally hold a positive view, with multiple firms reiterating buy or outperform ratings and setting a consensus one-year price target significantly higher than the current price, often around the $7.90 to $9.67 range. This consensus is built almost entirely on the commercial success of the AI platform and the belief that the legal noise will be contained. However, the market price action of late, down over 11% in the last 5 days and over 16% in the last month, reveals a significant skepticism gap between the analysts' financial models and the trading desk's immediate risk perception. This divergence is the core of the RZLV investment dilemma. The business Rezolve AI is building is centered on artificial intelligence for the retail sector, featuring a proprietary large language model they call BrainPower LLM. Their flagship product suite, called Brain Suite, includes tools like Brain Commerce and Brain Checkout, which are essentially AI-powered engines designed to enhance customer discovery, engagement, and most critically, to enable instant one-touch purchases across various channels, including support for crypto-to-fiat payments. Their pitch is simple: use powerful AI to reduce friction in the buying process, thereby boosting a retailer's conversion rates and average order values. They have managed to sign up major enterprise clients, which lends credence to their commercial guidance. The challenge, as reflected in the fundamentals, is that this kind of heavy enterprise-level AI development is capital-intensive, and the path to profitability is long. Recent financials show the heavy weight of investment. They have experienced deepening net losses and negative EBITDA, with revenue while showing high growth in percentage terms starting from a very low base. Their total equity is negative, and they have a sizable debt load, which heightens sensitivity to any perceived financial or legal threat. The recent capital raise and acquisitions are strategically smart moves to build out their ecosystem, but they also highlight the company's continuing high burn rate in pursuit of their ambitious ARR targets. The market is giving them a growth premium, a market capitalization exceeding $1.7 billion on very small trailing revenue. But the tolerance for risk, particularly financial and legal risk, risk is tightening considerably. Moving forward, the focus for RZLV over the next 10 days will almost entirely be on short-term technical resistance and support levels, as well as any official updates regarding the ongoing litigation. The near-term pressure appears to be defined a solid floor, likely tested around the $5 level. The psychological mark is also a significant technical support area that, if broken, could lead to a rapid flush lower as momentum shorts press their advantage. Conversely, a definitive legal filing or announcement that successfully dismisses or significantly mitigates the most serious lawsuits against Rezolve would act as a massive immediate upward catalyst, potentially seeing the stock reclaim its recent highs near $8.45, the 52-week high set just last month, in a matter of days. In the absence of such a concrete event over the next 2 weeks, the stock is likely to remain range-bound, oscillating between the current price and that $5 support, driven mainly by sector-wide sentiment toward high-growth, unprofitable tech stocks and the day-to-day news flow surrounding their acquisition integration efforts. The integration of SmartPay and SubSquid, particularly their crypto and data capabilities, is the fundamental expectation driving the bull case, suggesting a powerful convergence of AI, commerce, and digital assets. But the immediate reality is that this long-term strategy is being overshadowed by short-term judicial risk. The next 10 trading days, essentially taking us through the end of October, will be defined by whether the institutional fear stemming from the legal headlines continues to outweigh the euphoria generated by the triple-digit growth guidance. The high volatility and high beta coefficient of RZLV, around 2.19, mean that daily price swings will be amplified, making it a very high-risk trade. Investors need to be keenly aware of the technical floor at $5 and the psychological resistance at $6. A break above $6, supported by significant volume, say greater than 20 million shares in a single day, would be the first clear sign that the growth narrative is reasserting dominance over the legal noise. Given the complexity of navigating this high-growth, high-risk name, it is important to take a moment to reflect on your own portfolio management. Comment below how many shares of Rezolve AI PLC (RZLV) you currently hold, or what price target you are using for the end of the year, and what factor you think is most likely to move the stock in the immediate future, the legal risk or the RRR guidance. The core message here is that investors should be careful not to conflate compelling corporate growth announcements with stable stock performance. In the case of RZLV, the expectation of a straight line up following great commercial news has been repeatedly checked by the reality of complex capital market issues and legal headwinds, creating a constant struggle for the share price. A true breakout will require not just continued execution on the commercial side, but a definitive public resolution of the current financial disputes to alleviate the pressure from institutional investors. Until then, RZLV remains a speculation on a highly attractive future, one that is constantly being tested by the present legal instability.